All right, traders, let's take a look at these technicals. US Open just happened about 50 minutes ago, and market's somewhat stagnant. I think they're getting ready for some of the larger fundamentals that are happening later in the week. So I'm going to go straight over into the charts. Again, if you guys are new, guys, welcome to the channel. If you guys have been here before, welcome back to the channel. I'm Cleveland Bishop, but let's go over the technicals real quick. Okay, so currently what I'm looking at, guys, I am taking a look at this Euro U, and I also like the Euro CHF because the Euro right now structurally is pretty interesting. All right, so here's a quick screenshot of this Euro USD. I want to go out here to the monthly real quick, and these are just some of the drawings that we drew up in the community earlier today. I'll take these off just so we can start fresh. If you guys want more updates on what the technicals look like, because we only do one technical video for the channel a week, but we're going to be doing them all week in the community. Guys, just click the link down in the bio and you guys can hop right in. All right. So this is the monthly picture for this Euro USD. And if we zoom out here, we can see just, again, a better picture view of exactly, where we are, where we have been. And again, yesterday we talked about, how we even got to these price levels. All right. So guys, make sure you watch the video from yesterday as well regarding some of the fundamentals. Okay. So as you guys can see, we've been consolidating down here at the $1.16s. We have yet been able to break $1.16s. If you guys obviously here look to the left, you can see that was the same time around Q4 2017 that this was the first sign of U.S. inflation starting to come in pretty strong. This sell side move here in September and in October. So let's draw up a fib real quick, because we have yet been able to break past that specific structure, which is pretty interesting. All right, here's the fib. Boom, 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 from the low to the high. You guys can see we're sitting right here at this 38.2. And again, 38.2 means that this market has yet to have, a seemingly large retracement. You can coin this as a medium-sized retracement, anything that knocks off on that 38.2, which puts you in a strange predicament of basically, hey, this thing could pop off right now and start trading back to the upside, or we could kind of flow back down to the 50% level, which puts us right at $1.14. And that's the thing about this 38.2. It's not the strongest level, right? We like to play markets at extremes, okay? And so the 50 to 61.8 is a lot more advantageous to start buying markets up, okay? So we're gonna have to really keep an eye out on this Euro U, because definitely you can get pops at this 38.2, all right? But it just so happened that the most beautiful structure, right, when it comes to just a lot of market participation was happening down here at these lows. And for quite some time, guys, we were looking at this market, wanting to see this market sell off to this 50% area. All right, right now, again, we do have some wicks onto the structure, again, but we're maintaining. We're seeing a lot of price rejection. But there is a product of the market called wick fills, right, that can usually allow for markets to trade back inside of these previous lows, close at those lows, and then you start to see markets trade a little bit higher. It deals with another function of the market called price discovery. Those are very, very important aspects of just markets in general, any kind of market that you guys need to rationalize that you can use to your advantage. So again, this is where we are right now. We're gonna have to keep an eye on it. Let's head over to the weekly. What I do want to see, folks, is I would like to see a buy side push up into structure, even in the midterm, right? Here, if I draw up another fib from the high to the low, you guys can see we're sitting right there at a 23.6% retracement. And usually, again, if we can start to see markets maybe sell off a little bit, sometimes I don't like taking, breakouts up into structure if markets are hitting right off on the level, and if I see a lot of price availability down here in these lows, right? Think about it, folks. If I want to take basically a break right here in this price area, right? If I want to take a break right around this price area here, okay, well then what that means is my stops are gonna have to be way down here, potentially at the 15s. Maybe I'll get away with my stops being right there at the 16 lows, 15 highs. But if I get a pull back down into structure, my idea is still long, then I'm just getting a better price, right? Now I can maybe start to put some size on its position back down in the 16 mids, only to see markets have a retest of this price area here, which is the 17 highs, right? So basically I would want to see markets, again, they've already sold off. They've already pulled back up into structure here. I would like to see markets now hit around in these price areas, close around in these price areas, and then break outside of that structure, maybe only to the 18s, maybe only to the 19s. I'm not asking for too much. I don't need this thing running all the way back up into these highs. That might not even be the full-on idea as to where I think markets can go. From a fundamental perspective, the euro is not doing too hot. The US dollar is, gaining a tremendous amount of strength. We hit off on our inflationary targets. The Fed is heightening rates, quarter after quarter. It does seem a little bit more likely that this US dollar might start to get a little bit of strength. The only thing that this euro could do from a strength perspective is a lot more investors can start to look at the fact that, hey, they're stopping QE in 2018. That's pretty impressive. In the next 6 months, they won't be printing money from the Treasury anymore. And not only that, they might start raising interest rates in late 2019, right? So potentially market participants may want to start pricing those rate raises into this euro U. That would drive this market, back to the 20s, back to the 22s, back to the 23s. I can't believe we were up here at these 25s at one point. That was freaking amazing. All right, but in the short term, folks, remember, Forex markets, they're macro markets, but they're driven by micro events, okay? In the short term, I do think we may see markets trade and eventually break outside of this very small 300 pip range that we've existed in for quite some time. This range right here, folks, where we've literally sat right in between these two price areas for, again, this has been back since, I guess, since around May. Second week of May, we've been consolidated in these price areas. Eventually, we're going to break out. All right, now what fundamental catalyst is it going to be? Is it going to be euro driven? Is it going to be US driven? Is it going to be bullish for the euro? Is it going to be bullish for the dollar? Again, right now I'm leaning towards seeing a break of the $18s before we see a break of the $15s. It's all about getting a good price inside of the consolidation. I would rather not get a break of the $18s and we break higher. That's great. But it would be great if I could have that happen when I'm buying down here in the middle of the range. All right, that's just going to help me out when it comes to a risk-reward perspective, and it's also going to help me out psychologically because, sheesh, if I start buying up here at the 17s, I won't be able to hit my risk-reward ratio up into the $20s. But if I can start buying down here in these 16 highs, man, by the time we get to that 18 flat, by the time we get to those 17 highs, folks, we can already start taking some sides off, moving some stops to break even, and just kind of letting it ride, hoping for a breakout. Right, so that's the great thing about it. We can literally take profit at the high of the consolidation. That's amazing. All right, that's amazing. So that's something I am looking for. We have a UCAD setup that I'm going to keep for the community that we're also looking for as well. I'm thinking that, again, if this US dollar, it's somewhat of a contingency play in regards to that euro U, because obviously if we get an up move here for the UCAD, then that just means that we will potentially start to see some more US dollar strength. But I do think we will start to see a potential nice setup here play out on the UCAD. All right, now remember, again, I'm wanting to see US strength before we get that euro strength. Right? Remember, I want to see markets back down and, inside of this range here, hoping to get a better price before I get my run outside of that structure. If we get that US dollar strength, all that means, folks, is that we will also have a nice little situation play out here for the UCAD to the buy side back up into structure. So that is something also that I am keeping an eye on. Okay, so we knocked off the euro U. We got something setting up here on the UCAD. Something else I will give you guys is this euro CHF. Euro CHF is looking pretty interesting. Again, we have slightly another contingency play if this euro starts to gain strength or if the CHF starts to sell off again, right? Look at the massive sell-off we saw happening on that CHF. Again, tons and tons of buy side came in on the CHF in May. Lots of sell. This CHF's been going all over the place. But notice, again, lots of sell side came in on that CHF. We're now getting a retest of that initial break outside of this 23.6, right? We're testing this structural low here. Well, I would like to see this market take this retest and push back up into structure there. Okay, pretty simple stuff, folks. I'm using fibs, I'm using support and resistance, I'm just using pretty much straight up market knowledge to execute on these positions here. All right, so again, retest of the structure low, pretty nice and simple. Hopefully we can get markets to maintain this price area here. Worst case scenario, markets trade all the way back down into the 1550s. Now, again, that is something I am keeping an eye on. But if you get markets to trade back down into these 1550s, then that would probably be the best place to start looking for buys, right? Because, again, there's a lot more of a base right around these 1550s than there is around these 16 lows, 15 highs, which means you could easily get volatility to rip you back down into these structures. Folks, that's the thing about volatility. If you're not careful and anticipating when volatility is going to come into markets, then you can kind of get wiped out, all right? So there's a lot of structure around this area, which means there's potentially a lot of price availability to the buy side. Maybe we can get, some buy side participation within this price area only to have markets trade again back up into structure. A retest of the $1.17s will lead us to at least to take profit one. If we break out of that high, boom, we will be able to take that market back up into structure. Okay, so folks, it is Monday. All right, those are the pairs that I'm looking at the moment. That's 3 setups. Also have one more setup. We do. And I have been keeping an eye on this GBP JPY as well. But maybe we'll talk about the GBP JPY. It's not set up as much as some of the others, but it does look like we might get a little pop on the GBP JPY to the buy side as well. We'll talk about that one a little bit later on in the week. All right, guys, that is what I am looking at. Again, this Euro-U is pretty interesting. I do think we will get a break of 18 before we get a break of $1.15. All right, I think that will be the case. And then again, outside of that, UCAD, I think there's some opportunity for the UCAD in the short term. This is one of our more short-term plays, something I think can play out in the next 48 hours. EU might take, okay, a little bit longer. Remember, we don't have any kind of large data coming out for the EU up until Thursday, which is that ECB meeting. I'm thinking that ECB meeting, guys, is going to be the thing that can potentially drive this Euro-U back up into structure. Okay, so folks, again, there's some more data coming out this week from a fundamental perspective that could definitely disrupt all of these technicals. Okay, that's the thing about fundamental analysis. Sentiment-driven markets don't give a hoot about your Fibonacci, about your moving averages, about anything, right? If you look at the largest price moves in history, they disobeyed all technical ideas. Okay, so that's why you have to align yourself fundamentally, but you can start to pick markets apart and start to price in certain data points to say, hey, look, structurally, these are the things that might be an advantage to us. And right now for this EU, if we get some hawkishness coming in for the ECB, finally, maybe we can see a pop finally back up into these 17 highs. But if we get a little sell-off before then, again, we have 3 or 4 days before that meeting, maybe we can get a good entry. Okay, so guys, look, if you guys have any questions, let me know. We'll be talking about these markets all week long inside of our community. Click the link down in the bio and we'll be right there. Okay, folks, that's what I'm looking at. Let's see what we get this week, folks. See you guys tomorrow.